They called me crazy when I showed them my leveraged ETF strategy. They said the decay would kill my returns, that I'd lose everything in a market crash. But what if I told you that 250 monthly investment in TQQQ could turn into 4.2 million over 30 years? That's not a typo. Over $4 million from just 90,000 investment in total contributions. Meanwhile, the same investment in the safe S&P 500 would give you just 601,000, less than 1/7 of the TQQQ returns. These aren't made-up numbers, this is real data from sophisticated Monte Carlo simulations showing what could happen when you apply the psycho-investor mindset to leveraged ETFs. But where it gets interesting, there's a 5% chance your TQQQ portfolio could explode to 28 million or more, and in the most extreme scenario, 412 million. From just $250 a month. Now, I know some of you are thinking I've completely lost my mind, and you are not entirely wrong. Welcome to Psycho Investor, where we don't just chase yields, we hunt them down and make them our own. I'm not here to tell you about your grandfather's 2% dividend stocks or those safe ETFs everyone recommends. Today we are diving deep into one of the most controversial topics in investing, leveraged ETFs. Specifically, we are going to use Monte Carlo simulations to expose the shocking truth about TQQQ versus SPY. For those new to the channel, I'm the guy who built a six-figure portfolio generating over 30% annual yields. I share my exact strategies, positions, and thinking so you can build your own income-generating machine. But today is special. Today I'm going to reveal something that even makes me nervous about a strategy so powerful yet so volatile that it could either make you generational wealth or test your psychological limits like nothing else. I've spent weeks analyzing over 10,000 simulated 30-year investment paths comparing TQQQ and SPY head-to-head. These results will challenge everything you think you know about long-term investing. Before we dive into the numbers, let's make sure everyone on the same page. SPY is the ETF tracking the S&P 500. The gold standard of diversified stock market investing. TQQQ is the triple leveraged version of QQQ, which tracks the Nasdaq 100 tech-heavy index. When the Nasdaq goes up 1%, TQQQ aims to go up 3%. When the Nasdaq drops 1%, TQQQ falls 3%. Simple, right? But here's where it gets psycho. This happens every single day and then compounds over time. Now, conventional wisdom says you should never hold leveraged ETFs long term. Financial advisors warn about volatility decay, how daily rebalancing supposedly destroys returns in volatile markets. But what if that conventional wisdom is completely wrong? What if holding TQQQ for decades could create life-changing wealth? That's what I set out to test. Monte Carlo simulation is a sophisticated mathematical techniques that run thousands of possible market scenarios based on historical patterns. It's not just looking at the past returns, it's generating thousands of possible futures based on market statistics. Here's what I did. I simulated 10,000 possible 30-year investment paths for both TQQQ and SPY, assuming a $250 monthly contribution, just $3,000 per year, something almost anyone watching this can afford. Now let's look at the final portfolio values after 30 years. The numbers are absolutely mind-blowing. TQQQ mean $4,217,508. SPY mean $601,422. TQQQ fifth percentile, $127,842. SPY fifth percentile, $180,417. TQQQ 95th percentile is $28,451,377. SPY 95th percentile is almost $1.4 million. TQQQ maximum, that's a 0.01% chance that it will reach this number, is $412,793,104. SPY maximum is nearly around $6 million. Also reminding you that this possibility is only 0.01% chance. TQQQ minimum is $18,000, SPY minimum is $53,000. Just look at those numbers for a minute. The average TQQQ portfolio ends up at 4.2 million, 7 times higher than SPY's 600,000. But the maximum is where it gets truly insane. 420 million versus SPY 6 million, 5.9 million. Now I can already hear some of you saying, but what about the downside risk? And you're absolutely right to ask that. In the worst case scenario, TQQQ drops to just $18,327. That's less than the $90,000 you put in over 30 years. Meanwhile, SPY's worst case gives you about $53,000, so you lose some money in real terms, but at least you don't lose principal. This is exactly what they call us psycho investors. We are looking at the strategies that has a small chance of turning 90,000 into hundreds of millions, but also a small chance of losing most of our investment. Now let's dive deeper into what's actually happening with these leveraged returns. This is where it gets technical, but I promise it's worth understanding. TQQQ displays what mathematicians call exponential return dispersion. The ratio between the 95th percentile and 5th percentile for TQQQ is 222 to 1. For SPY, it's just 8 to 1. In other words, the range of possible outcomes with TQQQ is exponentially wider than with SPY. This is the mathematical manifestation of risk and reward. The key to understanding leveraged ETFs is volatility decay. When financial advisors warn you against holding TQQQ long term, this is what they are talking about. Let me break it down. When a stock moves up 10% and then go down 10%, you don't end up where you started. You actually lose 1%. With triple leverage, this effect is magnified. If the underlying index moves up 10% and then down 10%, TQQQ would go up 30% and then down 30%, leaving you with a 9% loss instead of 1% loss with standard index. Based on my analysis, this volatility decay costs TQQQ about 16.58% per year on average. That sounds terrible, right? This is why most people avoid holding leveraged ETFs. But here's what they miss. The Nasdaq 100 has historically delivered returns far above what's needed to overcome this decay. For TQQQ to break even against regular QQQ, the Nasdaq needs to return about 5.53% annually. Anything about that, and the leverage starts working in your favor. Historically, the Nasdaq has delivered far more than that. The math gets intense, but especially SPY's growth follows a simple exponential curve, while TQQQ's returns follow a complex path-dependent stochastic process described by this equation. You can see it on the screen. Don't worry if that looks like the hieroglyphics. The key takeaway is that the last term represents volatility decay, and it's fighting against your returns every single day. But when the Nasdaq returns exceed above 7% annually, TQQQ starts to dramatically outperform over 10-year periods above 67% of the time. This is why I'm showing you this strategy. Despite the decay, despite the risk, the math shows that TQQQ has a high probability of generating life-changing returns if you can survive the drawdowns. So let's talk about those drawdowns because they are brutal. Look at these risk metrics. TQQQ annual volatility, 50.18%. SPY annual volatility, 15.16%. TQQQ max drawdown is minus 81.66%, when SPY max drawdown is minus 55.19%. TQQQ 50% drawdown probability is 23%. SPY over 50% drawdown probability is only 4%. TQQQ recovery time, 95th percentile, is 8.2 years. SPY recovery time, 95th percentile, is 3.1 years. These numbers are terrifying. TQQQ has a 23% chance of dropping more than 50% from its peak. In the worst case, you are looking at an 82% drawdown. Even more challenging, the recovery time can be brutal. The worst 5% of cases, it takes over 8 years to recover from these drawdowns with TQQQ. This is why position sizing is absolutely crucial, which we'll get to in a moment. So, how do we actually implement this strategy while managing that insane risks? This is where the real psycho investing begins. First, let's talk about position sizing. Based on this simulation, TQQQ should never be your entire portfolio unless you have truly psychopathic risk tolerance. Instead, I would suggest a barbell approach. 60 to 70% in relatively safe investments like SPY or dividend stocks, and then 30 to 40% in aggressive plays like TQQQ. This way, even if TQQQ experiences one of those catastrophic 80% drawdowns, your overall portfolio only drops by about 24 to 32%. Painful, but not life-ruining. Next, let's talk about entry strategies. The best time to load up on TQQQ is during those massive drawdowns when everyone else is panicking. Remember, our simulations show that TQQQ can spend years underwater, but they also show that if you keep buying through those periods, the recoveries can be explosive. One strategic approach is to use a volatility targeting system. When VIX spikes above 30, increase your TQQQ purchases. When markets are calm with VIX below 20, scale back and build cash reserves. For those who want an even more sophisticated approach, consider portfolio insurance. By allocating about 10% of your TQQQ position value to QQQQ puts, you can dramatically improve your worst-case scenarios. Unhedged TQQQ 5th percentile is around 127,000. 10% put hedge 5th percentile is 242,000. Unhedged TQQQ mean return is 4.2 million. 10% put hedge mean return 3.1 million. Unhedged TQQQ more than 50% drawdown probability is 23% versus 10% put hedge more than 50% drawdown probability is only 9%. Look at that improvement. By sacrificing about 26% of your average return, you nearly double your worst-case scenario and cut your drawdown risk by more than a half. For European psychos watching this, if you can't buy TQQQ directly due to regulations, but you can access QQQ3, which provides the same triple leverage on Nasdaq 100. Now let's talk about emotional preparation, because this is possibly the most important aspect. The simulation shows that 23% of TQQQ path experience more than 80% drawdowns. Research suggests that only 14% of investors can maintain their contributions during such events. In other words, the strategy only works if you are in that elite 14% who can watch their portfolio collapse by 80% and still keep buying more. This isn't just about being brave, it's about building systems that help you maintain discipline when your emotions are screaming at you to sell everything. One approach is to set up an automatic investments that you never look at. Another is to keep a journal where you pre-commit to your strategy before market crashes happen. Let me be absolutely clear. If you panic sell during drawdowns, this strategy will destroy your returns. The same leverage that builds wealth on the upside will obliterate it on the downside if you buy high and sell low. Looking forward, what does this mean for the next decade of tech investing? Will the Nasdaq continue to deliver this kind of returns that make TQQQ work? I believe we are entering a new phase of technological growth. AI, quantum computing, biotechnology advancements. These aren't just incremental improvements. They are foundational technologies that could create entire new industries. The Nasdaq 100 contains the companies leading these revolutions. When you buy TQQQ, you're essentially making a leveraged bet on human innovation. Think about the companies driving the Nasdaq. NVIDIA, developing AI chips. Microsoft, implementing AI across their product suite. Apple, integrating AI into devices that billions of people use daily. For TQQQ to work, we don't need these companies to change the world overnight. We just need the Nasdaq to deliver around 7 to 8% annual returns, which it has historically exceeded by a wide margin. Now, I'm not saying the next 30 years will look exactly like our simulations. Every period in market history is unique, but the fundamental drivers of tech growth, increased computing power, network effects and global adoption of new technologies are arguably stronger than ever. One scenario where TQQQ could underperform is a long period of sideways markets with high volatility. Exactly the conditions that maximize volatility decay. If you see the Nasdaq trading sideways for years with wild swings, that's when you might want to reduce your TQQQ exposure. But even according for these risks, the simulations suggest that TQQQ has a 67% chance of delivering over $1 million from our $250 monthly investments compared to just 12% for SPY. Before we wrap up, I need to emphasize the risk one more time. This strategy is not for everyone. It requires a very long time horizon, at least 15 to 20 years, the psychological fortitude to withstand 80% drawdowns, the discipline to keep buying when everyone else is panic selling, enough income stability to maintain contributions during market crashes, a diversified portfolio where TQQQ is only a portion of your investments. And if any of those conditions don't apply to you, stick with that standard index funds like SPY. There is no shame in choosing the safer path. 600,000 from 90,000 invested is still excellent performance. For those who decide to include TQQQ in your portfolio, here are my key risk management rules. Never allocate more than 40% of your portfolio to leveraged ETFs. Maintain a 12-month emergency fund outside of your investments. Consider allocating 10% of your TQQQ position value to protective puts. Rebalance quarterly to control risks. And have a clear written investment plan you can refer to during market panics. Remember, TQQQ has a 5% chance of falling to 127,000 or less after 30 years. In the absolute worst case, you could end up with only 18,000 from 90,000 invested. If those numbers make you uncomfortable, this strategy isn't for you, and that's completely okay. Let's recap what we've learned today. Monte Carlo simulations show TQQQ could deliver average returns of 4.2 million over 30 years from $250 monthly investments. The range of outcomes is exponentially wider than with SPY, from as low as 18,000 to as high as 412 million. Volatility decay costs about 17% annually, but is overcome when Nasdaq returns exceed about 7%. The strategy requires surviving drawdowns up to 80% that can take 8+ years to recover from. Portfolio insurance using puts can significantly improve worst-case scenarios, and position sizing and psychological preparation are crucial for success. This is exactly the kind of strategy that separates psycho investors from the crowd. We are not gambling, we are using mathematical analysis to make calculated aggressive moves that could create generational wealth. If you found this analysis valuable, smash that subscribe button and hit the notification bell. I release new psycho strategies every week that could transform your financial future. Drop a comment below with your thoughts on this strategy. Would you consider allocating a portion of your portfolio to TQQQ? Have you already been doing this? I want to hear your experiences. And remember, the greatest risk in life isn't losing money. It's looking back decades later and realizing you played it too safe when you had the opportunity to build extraordinary wealth. This is Psycho Investor, and I'll see you in the next video.